Difference between primary and secondary market. A stock market is a place where you can buy shares of various companies. But did you know that the stock market comprises two types of markets, the primary and the secondary market? Well, it isn't a separate market in itself. It's just that the process is different and the combination makes the stock market a whole. Watch this video until the end and you will learn the primary and secondary markets and the distinction between the two.
Hello guys, this is Shweta and welcome to the world of Wall Street Mojo.
What is the primary market? When a company is created, the founders create a certain number of shares that they own, representing their ownership in the company. Now, these shares are then used to raise capital by offering them to the public through an IPO or an FPO. So when a company offers its shares to the public for the first time or offers new shares to the public, all in return for capital, they do that in the primary market. What is a secondary market? Say that the company has already offered its shares to the public through an IPO or even an FPO. What happens to those shares next? Well, it's simple. The shareholders will now own the shares, hence having ownership in the company, and then they can sell the shares or even buy more. Where would they do that? On the secondary market. Key differences. Well, that was the primary and secondary market in brief, but you will understand it better if we compare the two, and here are the key differences between them. The most apparent difference between the two markets is that shares are offered for the first time in the primary market. In contrast, the secondary market facilitates the trading of already issued shares. When shares are offered in the primary market, the prices are more or less fixed and specific. But in the secondary market, the prices of the shares are determined by demand and supply forces. Moving on, whenever you buy shares in the primary market, you do that directly from the company. So it is a company that will gain from the transaction. In the secondary market, you would buy or sell the shares from another fellow trader or investor. So the gain or loss will be made by them only. Also in the primary market, the underwriters are the intermediary between the company and the investors. On the other hand, brokers are intermediaries between traders and investors participating in the secondary market. In the primary market, companies can offer their shares only once through an IPO, but they can further offer new shares to the public through an FPO. In the secondary market, shares that have already been issued can be traded infinite times. By the way, the primary market is also known as the new issue market. The secondary market is also called the aftermarket. The final difference is that since IPO and FPO turnover is substantially less than the daily trading turnover, the secondary market makes up more of the stock market. So this was a quick video on the primary and secondary markets and the critical differences between the two. If you want to learn more such stuff about the stock markets and finance in general, then don't forget to subscribe to our channel. Also, don't forget to give this video a like and maybe even share it with someone. We'll see you in the next one.